Alright guys, in today's video I want to show you a trading strategy for beginners that you can use at pretty much any given time of the day. I will show you how you can find trade entries somewhere down here for a nice reversal, how you can go in here for a nice reversal, how you can trade this reversal, and how you can trade this breakout. Alright guys, you will get to see how trading actually works, why the market reverses here, why it reverses here, why it reverses here, and why it suddenly breaks out here. And as you can see, guys, these moves, these entries here are at very different times of the day. You can trade this in the afternoon, but you can also trade this in the early mornings. You can even trade this in the London session, meaning pre-market open, if you're an early bird and you want to trade before your workday starts. But I just prefer it doing the New York session, so anything from 9:30 all the way here till about 4:30. That is what I like to trade, but just keep in mind you can also trade this exactly the same in the pre-market session. So let's get right into it. Guys, what you need to understand is there's no real strategy that just magically works. What you need to understand is the market moves in a certain way because it functions in a certain way, because the market has different goals. And one of the goals that the market has is to transact as many contracts as possible. Okay. The other goal, it's very easy, is to rebalance inefficiencies. Now, going back to the first goal, transact as many contracts as possible. Where can the market do that? Well, if you know what it is, if you don't, I'll explain in just a second, is the market can transact as many contracts as possible at levels of liquidity. Okay, it's very, very interesting, because once you understand where liquidity is, then you can actually see the market move to levels of liquidity, react at those levels of liquidity, and move all the way back either to a level of imbalance, so it can rebalance this imbalance, or to another level of liquidity, and then just bounces back and forth between liquidity and liquidity. And I will show you exactly how this works using a tool called Bookmap, where you can see this liquidity and you can see why the market moves the way it moves. Okay, and we will go into exact entry signals, how we can use Bookmap to actually find very good entries. So let's get started. So let's say you open up your laptop at, for example, 9:30 in the morning. Okay, it can be later, it can be earlier, it doesn't really matter. The time of day doesn't really matter with this market structure. Okay, once you understand how and why the market functions the way it does, then you can trade at any given time of the day. All right, so let's go back to about 9:30, and the market is now about to open up in about probably like 5 minutes. All right, so this is the 9:25 candle. What can you see? You can see here a volume profile. What is a volume profile? The volume profile basically shows you how many contracts were traded at any given price level. So it's not volume over time, which usually are the bars that you see on TradingView, at least down here. It's volume over price. So for example, at this price level here, at the 555.75, we had a certain amount of contracts that were traded, and there were a lot more contracts that were traded compared to this level here, because here you can see a high volume node, and here you can see a low volume node. High volume node, low volume node. All right. Now there's a couple of shapes, day shapes, when it comes to the volume profile. This, for example, here is a D-shape volume profile, meaning it's a balanced day. All right, meaning you don't have a clear advantage to the long side, neither to the short side. And once we know that, we can now check, okay, we don't have an advantage to the upside nor to the downside, meaning we can most likely now trade reversals, because the market is likely not about to break out here, and most likely it's not about to break up even further all the way down here. So that's very interesting. The thing is, what you need to understand is, where's liquidity? Where could the market potentially go to? Because now we've broken out. We are now in a short term, at least, downtrend. But where can it reverse? And there's a couple of very interesting price levels where the market usually reverses. The first one is at previous levels of liquidity, especially at very near lows. Okay, so if you just look at the 5-minute candles right here, we can see that we had two equal lows here. And I will explain why the market reverses here at these levels. And we had this yesterday's volume point of control. The volume point of control is just basically the highest high volume node. Okay, so at this price level, yesterday, most contracts were traded at the 543.75 price level. Okay, that's just basically the volume point of control. Now, we have the volume point of control, meaning this high volume node, and previous high volume nodes, just so you guys know, act as resistance to the market. And here we have quite a few of them. All right, we have another one here, so it's also at the same price level roughly. So we have this high volume node, which we now know act as resistance, but we also have these levels of liquidity here. Very interesting. Now, what is below these lows right here? I already mentioned this. Liquidity. Why is there liquidity, guys? Because this is where stop losses are. Okay, so if you place a trade, for example, here, you go long, all right? You're like, yeah, I'm protected by this low down here. I'm protected by this low down here. So the guys who went in here long, they placed their stop loss right here. Okay, so they need to sell down here. These guys need to sell down here. Now, if you were a $1 billion hedge fund, multiple $1 billion hedge fund, it doesn't really matter. You want to get into a trade with huge positions. What do you need? Well, if you want to buy a whole lot of volume here and you want to exit somewhere here, well, you need contracts that are able to be traded here. All right. So if these guys bought here, the counter positions, obviously, they will sell down here. And if there's, just imagine, if there's 500 contracts that are able to be bought down here, these guys, that are being able to sold down here, these big market players can now push the market lower, push it below this level, just push it down, and then buy up all of these sell stops that are laying down here. They can build a huge position in a matter of seconds. And once the market goes up, they have a very nice profit. Okay, so let's actually see what's about to happen. We can see the market's in a downtrend, short-term downtrend at least, overall, the volume profile. And let's see what happens once the market opens up. Boop. Exactly what I just mentioned. Of course, I have the advantage of hindsight in this video, but I also traded this live yesterday, just so you guys know. And this is exactly what stop fishing looks like. Okay, so the market went below this level of liquidity, below these support lines here, grabbed this liquidity, it swept it, and then it went back all the way here. Now, why did it go here? Because this right here is a high volume node. Intraday, meaning for today's day, these high volume nodes act as levels of interest because here the market is again able to transact a lot of contracts because these high volume nodes act as levels and price levels that are being accepted. Low volume nodes and accepted prices, meaning the market doesn't want to transact there. So very little volume is usually being transacted there. However, high volume nodes, a lot of transaction happens here. So it's very nice for the big market players to just exit their position here because here's a lot of transaction happening. Okay, so let's actually take a look. We now know the market went below this level, but where can we find an entry? We now know before the market opened up, here there's going to be a lot of liquidity. So we just wait for the market to push lower. Overall, we're in a balanced day, so we have an advantage for a long trade down here anyways, right? And let's see what happens. So that was 9:30. It was roughly probably 9:30, this move right here. There it was. Okay. So I'm going to zoom in a little bit, and this will look very confusing at first, but you will see exactly what it is and how it works in just a matter of seconds. All right. So we can see here that the market overall, as you've seen previously, was in a short trend, right? And now we have this level of liquidity here at the 535 to about the 534. Okay, so 535 to 534. Here you go. You can see the liquidity here, right? That is where the stops were. Okay, guys? This is where the stops were. Now, what happened? It's very interesting. The market opened up about here at this line. Okay, so 930. And then here we had this level of liquidity where other people call it support. I just call it areas of liquidity because support and resistance doesn't really work. It's all about liquidity. All right, guys. Now the market opened up, went up, all right, went lower, lower, bad auction quality. I'll come to that in just a second. And then let's take a look what happened here. Guys, take a look what happened here. You see all of these huge bubbles, big, big sell bubbles, right? 54 contracts, 22, 23, and I can see this here at the bottom, guys, in case you also want to see it. 38 and another 79. Hundreds of contracts that were being traded here, all right, guys? And then what happened? What happened, guys? Super, super interesting. Take a look at this. After all of this selling, what happened? Just look at the colors right now. Just look at the colors. Aggressive selling or passive selling, I'm sorry. Selling, turned into buying. Okay, now you see a bunch of green candles down here, meaning buying is starting. And now we see something else. We see a break of structure, meaning we made lower lows, lower highs, lower lows, lower highs the whole time. And here for the first time, higher lows, higher lows. The high didn't get broken through, but now, boop, we can see higher highs as well. Higher lows, higher lows, higher highs. And that is a break of structure. So what can you guys do now? You can obviously enter the market. Where? Well, I would obviously enter it here at this break of structure. You would get into the trades. You just place a limit order right here at the 35s. And then you are in the market here at the 35 level, which is somewhere down here. All right, guys? And now the question is, well, where do you exit? And that's also very easy. Well, you exit 35 somewhere where there was a previous level of interest, at least short term. So for now, take a look at this. It's a bit more confusing than charts, I understand. However, it's very easy to read once you understand how it works exactly. Where could the market potentially turn around? Like I said, I have the advantage of hindsight here. However, test it out yourself and you will see that this always happens. It's very interesting to see. Guys, we can see that we went up whoop, extremely fast all the way to this level. Why? Well, guys, it's very obvious. Very obvious. We had some previous level of liquidity here. We had a pretty large order here. And these two combinations, these two things in combination, they make up a good level of resistance. Okay, guys, just short term. So if you just want to scalp the market, you want to get in and out extremely quick, this would have been entry here at the 35s roughly. This is 931.28. Okay. And this right here is 931.41. Okay. So it's a very, very quick scalp. You could also see now, if you're still in the trade, you still make higher highs, all right? You can see that liquidity is coming in here above. Now, this liquidity might get grabbed, it might not. However, it's smart in this case because we also have a previous, at least short-term high. So if you see this as a range, this is a high right here. You can just place your take profit shortly once you see this liquidity coming in before this level of liquidity, and then obviously go for a nice profit. And if you, like I said, went in here 35, you got out at about, let's say 50, all right? So somewhere in the middle of this consolidation right here, 50, that's 15 points, 60 ticks. That's a pretty solid profit, even with one contract only. And we did that just by thinking, where is liquidity and what is happening at this level of liquidity. And now if you fast forward a little bit more, we can see what the market is doing next. We grab this liquidity one more time, that's fine. No worries, we are going down. We're moving back up. Okay, interesting. Why did we move all the way down here? What is here, guys? What is here? Two equal lows once more. Okay. 2 equal lows. And once you mark these before you start trading, things can become quite easy. You can also see previous here as well, high volume nodes. All right, guys. So you just need to double check where are levels of interest. And the market went down all the way to the 88s down here. What is at the 88s? Let's take a look. The 88s are somewhere down here, guys. So quite a long way, right? When was this? Let's check. Now the market is about to drop very soon. Boop, boop, boop. Here you go. Look at all of this. And whoop, the market is just moving lower and lower and lower here. Was it this level? Let me check. At the 46. Could this be the case? Yeah, could be the case at the 45. So the market turned around at the roughly at the 88s. So somewhere here roughly. This is where the market turned around once more. Why? Guys, very obvious now. Very obvious. Look at this. Look at this level of liquidity. And there's a difference, one more tip here, just so you guys know, between short-term liquidity and long-term liquidity. How long has this liquidity been in the market? This right here at the 500s, also a magic number by the way, has been in the market for a very long time. So this is real liquidity. This most likely is fake liquidity. But let's take a look what happens here. And I know there's so many small little details. That's why trading is so fun. It's like a puzzle. You can combine one piece to the next and actually get an idea of, okay, the market now could potentially react. What is happening, guys? You can see that the market is moving towards this level of liquidity with very bad auction quality. What is this, guys? What is this? This is stops flying, okay? These are stops flying. This is not natural behavior of the market. This right here is natural behavior of the market. Back and forth, back and forth, back and forth the whole time. Green and red bubbles. However, only red bubbles with extreme speed. Slow speed, you can see the market is going sideways, kind of lower. Extreme speed, boop, the market is just falling. Bad auction quality towards a level of high liquidity, long-term high liquidity. Okay, now we see that this liquidity here gets moved higher. Interesting. So that's a bullish signal for now. And then we see what? We can see that we have huge amounts of volume being traded here. So we know, okay, this could be a level of interest, but we don't get in just yet. We wait for what? We wait for a break of structure. We can see, okay, higher lows, buying coming in. And once we see this break of structure right here, boop, you get in at the 501. And where's the level of, I guess, interest in this case? Well, let's double check. Most likely somewhere here where this liquidity is, right? And that's where the market turned around for the first time. Now, you can stay in the trade, guys. No worries. But look what happened next. The market went sideways and then another round of stops being fished. Again, bad auction quality, guys. Look at this line here. Super, super bad auction quality. All right. Where to? Roughly the previous level of liquidity, of course. And once you see this previous large order, huge levels of liquidity, bad auction quality, and then a break of structure right here, you enter at the 500s. And where do you take this? Well, let's take a look. I would go for the 510s the very first time. And then we have quite a lot of room to play with. This right here, another large order, here another large order. So you got to be cautious at the 20s, roughly, I would say. But just wait and wait and wait, and there's the 20s. And that, guys, right here, we entered somewhere here, I believe it was, at the 500s. That's an 80 tick move, okay? That's a very nice profit. Okay, so we're now here inside this range. Intraday, if you just look at the market open, meaning the New York session, I'm sorry, the AM session right here, we are kind of short, but we can see, okay, this move here got rejected quite hard. So where can the market potentially go to next? What could be our level of interest? Well, you could say somewhere here, because low volume node, there might be some liquidity here, okay? However, if we take a look at what most likely is about to happen, then we see that we have huge, and I mean huge levels of liquidity, most likely above the 21s all the way up here. So somewhere here, right guys? Somewhere here. Now, you can combine this with yesterday's or even the days before volume profile. So for example, here at the 588s, we can see there might be some liquidity here, a low volume node for today, high volume node for yesterday. So this could potentially be a level where I'm saying, yeah, the market could go here and I might look for an entry. Okay, next to that, yesterday's high of the day, today's high of the day. So there is definitely some huge amount of liquidity here. So I'm either watching the market go here or go here. The cool thing is now that we know the market is most likely moving higher, what can we do? Well, we can scalp using the order flow everything that we see here to the upside. Everything that we do see here to the upside. So for example, this move right here, whoop, all the way down there, where to this previous level of liquidity. You could have scalped this, might have ended up in the loss, to be fair. Yep, would have been a loss, but that's totally fine because whoop, you will get another entry here at the 490s, I'm sorry. Huge levels of liquidity, very bad auction quality once more. We grab this liquidity here and then boop, the market went higher. And now, like I said, you scalp everything that you see and that you can get your hands on all the way up to roughly the 585s. All right, guys? So take a look at this. You scalp everything that you see and that you can get your hands on. For example, this situation right here. And that's why I mean you can trade this at any given point of the day, any given time. It doesn't really matter because you only need small movements. 40 ticks here, 20 ticks there, 60 ticks here. And that's how you make a living trading. For example, here, the market went up once more. We had some highs here. We had a low here. All right. What happens? We had an uptrend. So people believe the market will just continue going up. Then we see our first low. What do people do? They place their stop right here. The market went higher. It couldn't go any higher, and I'll explain to you why in just a second. And then, boop, stops being fished. Where to? This previous large order, previous liquidity, guys. The market could have technically go down a bit further if you want to be safe. However, bad auction quality once more, and the market just shoots up for another roughly 50 to 60 ticks. But guys, think about why we couldn't break this high, which also was a previous high here. Why couldn't we break it? Think of the market as a car. If you want to go with your car 300 miles to another city, what do you need? Let's say the car's functioning, obviously. What do you need? You need gas, right? Okay. The market is kind of the same. In order to break a high, the market needs gas. Meaning, if certain market participants want to be rewarded, or if they want to trade the market higher, they need to get rewarded. That's the right wording. They need to get rewarded. How do they get rewarded? Well, by having huge position sizes, by having hundreds of contracts that were traded in their favor, sometimes 50, sometimes 30, doesn't really matter. Huge positions. And they want to make sure that they get rewarded for pushing the price higher. So for example, here, all of these guys, long, right? Interesting. So what do they need? They need people now to sell. Okay, guys, they need people to sell so they can buy a lot of contracts. Look at this here. 64 contracts were bought at this level. 64 contracts. So here there were most likely some stops. Okay. The big market participants bought 64 contracts. We now have fuel in the market. And now they can get rewarded for pushing the price higher. Okay. There we go. Look at this, guys. Same level. I wouldn't have gone in here, to be fair. The market now obviously is trading kind of in a range, so you got to be a little bit cautious there. And then aggressive buying coming in, and the market is pushing higher. All right, guys. So let's fast forward to the 86 roughly. Once the market goes there, let me... Look at this, guys. Here at the 39s, I think that was the volume point of control, roughly here. Yesterday's volume point of control, guys. That's roughly where we are in terms of our chart right now. But let's wait until the market goes all the way up here. Now, technically, in theory, you could hold your trades that long. I don't do that. I just scalp, meaning I'm in and out of my trades within seconds, most likely, because I just like trading that way. And I like to get in and out of my positions fast, because that way I can trade pretty much all day long. And now we can see what is happening right here. That was the level where I told you guys, okay, this could get interesting right here. Okay, it could get interesting here. Now at the 75s, you would not look for an entry just yet. It was right here. Okay, at the 75s, you don't look for an entry because it's an intraday high volume node. So there most likely will be a reaction. However, you have no advantage in trading at these high volume nodes, at least intraday. All right, guys. So you keep your fingers away from your keyboard. But once we pass the 86 level, then we can get active. Okay. Now, to be fair, can be roughly anything between the 86 to, I would say, the 89 level. That's where it gets interesting. Okay. So the market is trending, going higher. And here for the very first time, you can see liquidity, guys. All right. Low volume area on the charts. Liquidity, meaning there's stops here. And what do we see? The market is just pushing through. Now, why would we not enter right here? And it's super obvious. Super obvious. Couple things. First of all, there's no break in structure. The market's just trending up. Don't go short here. The market's just trending up. One-way auction. Just up the whole time. Next to that, also take a look at the liquidity here. Liquidity, guys, acts like magnet, liquidity acts like magnet to the market, meaning you see all this liquidity up here, right? Look below. There's no liquidity here. And if liquidity is like a magnet to the market, where is the market most likely going to go next to? Most likely higher, right? So we don't want to get in here. Very interesting. Now that we know that we couldn't find an entry here, where do we go next? Well, most likely here to the 20s. So let's take a look. 600, magic level, by the way. But at the 20s, that's where it gets interesting for us. So let's take a look. All of this is just nonsense for us. We don't want to get in here. And then once we break this level of liquidity here, that's where we want to get active one more time. You could obviously trade this all the way up here, meaning we just scalp it all the way up there. However, if you're just a bit patient, you just wait for the market to go to that level. And this is where it gets interesting now, guys. Look at this. Okay. For now, we're at the 15th. So for example, here, high of the day was at the 21s. And you can see this on the chart as well. Everything that we just walked through. Okay, guys. Everything that we walked through. And we are roughly at the 15th. It was right here at the situation. We don't want to get active just yet. Technically, to be fair, you could in terms of the volume profile, because it's a pretty balanced day for now, but I wouldn't want to get active now. So once I see in the charts, you just wait the whole time. Boop, right there. You wait until the charts move higher, okay? And that's when you want to get active. So let's wait. You see all of this liquidity here. We have some huge liquidity at the 25s, so we actually do want to wait most likely for the market to go all the way up here. Look at how strong this liquidity is. I'm just fasting forward right now. Stick with me for a second. And then you will see exactly why you can enter right there. It's amazing, guys. It's just so beautiful. I'm going to make this a bit smaller. There we go. You see all this liquidity here? So you just wait. I think it was in the... There we go. That's the time where the market went in. And let's check. What is happening, guys? Guys, what is happening? Take a look at this. The market is moving in a very natural way, basically. Boop, bad auction quality. Okay, stop fishing. There were some stops most likely here. Stops being fished. What is stop fishing? Fuel to the fire. So the market can now move higher. And look where it went. Super, super, super fast. Super fast. Still extremely fast. You could technically get in here at the 25s for the very first time, because you see all of this and then you see a break of structure, meaning the highs here are being held. And then we see selling coming in, selling coming in. Once we break this low, you get in here at the 20s for a short trade. Where's potential resistance, guys? Most likely here where this move started, this one-way auction. So get out here. So just a very quick scalp, about 20 ticks. And then you can see what's happening here once more. Well, guys, compare this price level now. Buying and selling, buying and selling, buying and selling, meaning there was interest in trading there. Here, it's just dead right now. So it's a change in market structure once more. You wait. These lows are broken through. Lower lows, lower highs, and then boop, you get in here at the 22s, most likely only to the 19s. So very quick scalp. Gotta be a bit cautious. You could stay in a bit longer, but move your stop loss to break even as soon as you can. And now we see this move. Guys, look at this liquidity here, all right? It's been there in quite a long time. We are still above our level of interest. Perfect. And now we see these stops here being fished. Look at this, guys. Look at this. Is this good auction quality to you? Is this what natural trading looks to you? No, guys. This is an algorithm. Stops, boop, were being fished. All right. So right there, when you see this, the market's now just basically doing nothing after that. Look at this. No real interest in trading anymore. Here, look at this, how dead it is. That could be a very nice entry to the short side. Okay, guys? Now, this might work out, this might not. You can see if we scale out a bit further, the market went back one more time. So you place a stop, obviously, hopefully. This is 29, so this is 30, so that's a very tight stop. You could potentially even place your stop loss somewhere here once you get in. And then the market just goes down and you can have a very nice profit. Okay, where is the market most likely going to next? Look at this chart. Look at this chart. Where is the market most likely going to next? We're up here, right? First of all, here, high volume node. Why? Because the market participants who went in here, they need a place to offload all of their contracts. So right here at first. Now, where's another level of interest right now? I would say, well, these stops were fished already. Maybe potentially here, low volume node. Interesting level. But for me, that's not too clear right now, to be fair. So I wouldn't know where to completely enter the next time. Potentially somewhere down here. We have this strong move up here, one-way auction. This is an unnatural move for the market as well. So the market likes to rebalance these moves. Liquidity most likely somewhere here. So let's double check. But to be fair, you could get in here. That's exactly what I meant. Boop, boop. And this right here would have probably been your entry, where there was a lot of volume being traded. But that's it, guys. That's how trading is done. You just wait for the market to give you obvious signs where it wants to trade to. This right here was not obvious to me, at least that much. So you got to be a bit more cautious here. You can see though, almost went to yesterday's volume point of control one more time. So another level of interest, I guess. And then you just check what is happening inside the volume profile here. And you just scalp 20 ticks, 40 ticks, 60 ticks, one at a time. And that's how you trade at any given time for the day. And just remember, guys, once we went from this level of interest, we went further down, right? You have all of this move right here to go short. Because you know the market most likely is going somewhere here where there's previous levels of liquidity. Or where there is liquidity, I'm sorry. So you can trade this short all the way. You just look for entries. You go into Bookmap and you look for entries short the whole time. The whole time. 10 ticks, 20 ticks at a time. And that's how you trade at any given time of the day, even if you're a complete beginner. This is super simple. If you have any questions about this, let me know in the comments down below. But this is not a trading strategy. It's the way of trading the market with logic, by understanding why the market moves the way it does, why it moves up, why it moves down, why it goes sideways sometimes. You now should understand or get closer to understanding the entire picture of how the market functions. Because if you know that, you can trade, hopefully, and make some good profits along the way. Without further ado, I'll see you guys in the next video. And I hope you like this one. If you have any questions, either send me a DM on Instagram or let me know in the comments down below, and I'll see you guys in the next video. Bye bye.